Hey, Flooring Pros. All right, it's Jerry Levinson here, and I wanted to go over how we pay commission to salespeople. I'm sharing the document with you guys, and I thought we'd just go over it. Let me see if I can share this screen and put it in the correct view. All right, so I want to talk about how to pay a salesperson straight commission. That's the goal, so that they earn exactly what they're worth. And paying them straight commission is very valuable because their pay is based on their performance, and that's the best way to pay anybody, right? But we want to guarantee a minimum. So what's our goal here? Is first to hire great salespeople. One of the things that you have to do when you're hiring great salespeople is guaranteeing them some sort of pay. If you put it out there that it's a commission-only pay, it's going to be harder to attract good people. So if you can guarantee a minimum pay, then you're going to have a much better likelihood of attracting quality talent. All right. And the second, you want to motivate salespeople. You want to pay them as much as possible because the more money you're paying them, the more they're making you. Actually, the more they're making you, the more you end up paying them. So it does work out to your favor if you've got a salesperson making a lot of money in your company. And third, we want to manage cash flow. This is a big thing I learned in this business is managing cash flow is everything. I mean, it's really tough. So I'm going to show you a way in this system how we manage cash flow and we can still pay our salespeople really well. All right, so the base pay is $15 an hour. That's guaranteed, or $2,600 a month. So how that works out, it's $15 an hour times 40 hours a week is $600 times 52 weeks in the year is a total of $31,200. 31,200 divided by 12 months gives you a total of $2,600 a month. At a 10% commission, they would need $26,000 in sales a month in order to earn the minimum. And again, that's what we want them to earn. All we're doing here is guaranteeing that if they don't make $26,000 in sales, then we will at least pay them a total of $2,600 for the month. So they can at least earn $15 an hour based on a 40-hour week. We don't track hours. So, and this is all up to you guys. I'm just telling you guys how we work. You're going to have to navigate through the laws in your state and just whatever you're comfortable with. But hopefully this gives you a guideline and base to work off of. So pay is based on sales for the month where deposit was received. So we don't look for the job to be completed. We just want to see that the sale was made and we did receive a deposit. With this system, we have time to get the job completed and collect the balance before they're finally paid. The pay period is twice a month. It's on the 7th and the 22nd. But it's paid the following month. So, for example, let's say in June, they have sales of $45,000. They would earn $4,500 in commission. We would pay that commission in July. And I got this method from Bill Schober in Oklahoma. Great idea. It really helps you manage cash flow very well because in June, you can figure out what you're going to end up having to pay all your employees for July. So you can make sure the money's in your account and that you can afford it and you have time to collect the balance as well. So, and we also pay on the 7th and the 22nd. This is huge for cash flow. So if you pay every week, it puts a lot of stress on you and your bank account and also taxes. If you pay twice a month, you're going to end up paying, or if you pay every other week, you're going to end up paying 3 times a month, 2 or 3 months out of the year. With doing it on the 7th and the 22nd, it does a couple things for me. One, I can measure the entire month, and then I have until the 7th. I know what my payroll is going to be on the 7th. And then the 22nd is just, 7 days after the 15th. So we split it up that way. I've been doing this way for a little over a year now, and it's working out really well. We don't track vacation or sick pay. That's something you can do. And I think it's just a cultural thing. If you've got a salesperson who's taking a lot of vacation or has a lot of sick pay or a lot of sick time, then there's probably other problems and things you need to address. But we're not tracking that stuff here. Again, in your state, some of the rules, you may have to track that stuff. So that's just how we work. All right, so I think it's important that you define commissionable sales to your salespeople. For us, it's the total sales minus sales tax and the dollar for dollar expenses. A dollar for dollar expense could be things like floor prep after the fact. Sometimes we have promotions where we do free tile tear out. And the way we do that is we take off the expense of the tile, we take that off the sales amount. And we're still looking for the same margins of commission. I can explain that deeper to you if you need me to, but for this video, you just want to define what a commissionable sales is and how they'll be getting paid. And again, some of you guys pay off a profit. We pay off the total job. So, but it is based on the percentage of profit. So you should be using RLM to track that. What's your profitability? There are other programs that you can use to track your profitability to make sure that you're hitting the margins that you want. And these aren't markups, these are margins. There's a difference in that too. So if they're over 45%, 12% commission. So we want to encourage them to sell at a higher margin and make a better commission. If it's under, or if it's 35%, if it's between 35 and 45%, they get a 10% commission. That's most often what we end up paying them. If it's under 35%, we go down to an 8% commission. And if it's under 30%, we're going to discuss it. We may do a portion of the profits. We may do no commission because they just made an error. We salvaged the job. We're not charging the customer more. We're going to eat it, and so will they. They'll participate in that. Bonuses are based on total sales for the month. So we give them a 2% bonus on sales after 40,000. So this is easy. You don't figure out each individual jobs. Once you're done figuring out all your commissionable sales, then you just look at the total. Let's say they do 45,000 in sales. You're going to give them an extra 2% based on the 5,000 that they are over 40,000. So they would get an extra, in that case, what is that, $100 or $1,000? So bad. I should know that off the top of my head. 5,000 times 2%, $100. So they get an extra $100 if they go to $45,000. Let's say they go over 60,000 in our scenario here. They're getting 2% on the amount that's between 40,000 and 60,000. That's their bonus. So on $20,000, they're getting an extra $400, right? So on over 60,000, let's say they go up to 65,000, they get 3% of the additional 5,000 that's over 60,000. They go over 100,000, we give them a $100 bonus. It's happened a few times now, so we definitely are looking for that $100,000 plus salesperson. And again, this is mostly residential retail. So you got to do things differently when you're commercial and you're working on smaller margins. So there's definitely different considerations, but hopefully, again, this gives you a good base. And then adjustments to your commission. We may adjust the pay based on errors, and any adjustment will not affect their guaranteed minimum. So we'll never go below that $2,600, but we may, in a future paycheck, take it out. We're all adults here. We discuss things. I don't like punishing salespeople. There are sometimes there are errors, and I've been in business for over 30 years now, and salespeople are very emotional. They've got a tough job. The last thing you want to do is really crush the emotions of your salesperson, because maybe they screwed up 2 weeks ago, but guess what? They're out heading for another sale today. And the last thing you want to do is put them in a really bad mood before they're going out and they're trying to sell and make the company more money. So be careful about when you have these discussions with them. Don't do it before another appointment. Don't yell at them in front of everybody. Handle that with care. Be aware of your salesperson's emotions. It is important. It's different if you plan on firing that person, but all in all, you want your salespeople to be in a good mood and protect that emotion. All right, guys, that's the video. So hopefully that worked for you. If you got any questions, reach out to me and happy to answer that. I'm putting this on YouTube. You should subscribe to this YouTube channel. You'll get a lot of good information out of here. You can go through just what you're looking for. Anything you don't see in the YouTube channel, reach out to me. I'll make a video on it.